Hi, everyone. I'm here with Owen Lau, Executive Director at Oppenheimer. Welcome, Owen.
Thanks, Steve. Thank you for having me.
So you're one of my go-to guys when it comes to tracking the latest developments in Coinbase, and they released earnings yesterday. And I think it's safe to say that maybe expectations were sky high, but the market did not react well. So why don't you just explain, walk us through what they reported and why investors are trading down on it today?
Yeah, exactly. So we have been telling people that to be cautious going into the print because when we track the volume, trading volume and stuff like that, we saw a around 40% decline in trading volume on a sequential basis. First quarter was a good one, but second quarter, we knew that it wasn't that good. And when we look at the consensus number, which is compiled by many other analysts covering this stock, we still believe that the expectation was pretty high for whatever reason. And so we kind of expect this outcome. They came in very close to our estimate, but way below consensus. And that's why the stock react pretty negatively today. I think the stock is still down around 16% today. But I don't think there's anything that we call out that raise any red flag because we knew that after the Liberation Day, there was a huge concern around recession in the second quarter. So at that point, when we see something like that, people tend to be more on the risk off mode and tend to trade less on crypto. That's why trading volume came down. But again, it was like within our expectation. It was just like I think the consensus was just way too high.
Yeah, it's hard sometimes. I guess it's easy to forget because it was a few months ago. Even though I guess today is Liberation Day Part Two, perhaps that just how spooked markets were in early April when the tariffs were initially announced, and they were just such large numbers. Something else that I know we've been reporting on, I know you cover it too. Perhaps some softness in demand was covered up by these massive treasury companies that are raising billions and billions of dollars to buy assets that have nothing to do with retail enthusiasm. I know for myself, and we've been tracking Google Trends to get a sense of retail interest in buying Bitcoin and other assets, and it has been soft. I know that was reflected in Coinbase's earnings as well.
Mhm. Yeah, exactly. Sometimes you don't know like how that could impact trading volume, but we do know there are lots of treasury companies being formed in the first half of this year. Sometimes it could be good, sometimes it could be bad, but it looks like at least when you see more buying power, you may have hope that it could support trading volume, but it turns out that it did not in the second quarter. You never know because once these treasury companies being formed, they can raise debt, they can raise equities. Down the road, it can also increase the buying power of this crypto. If they use Coinbase to be the custody or trading venue or execution partner, it could support this trading volume longer term, or may not be just Coinbase, but also the whole industry with other exchanges as well. So I think too early to say. There are so many treasury companies being formed this year, but we'll see how that plays out.
Yeah, and I wouldn't be surprised if I mean Coinbase frankly many other major exchanges were involved in brokering some of these big acquisitions by the treasury companies. But I mean, as you know, and I'm sure many people listening know, retail traders are far more profitable than institutions, which is what this would qualify as. So if there is not that carryover into retail, like the excitement we had during the NFT craze, you're not going to see the same impact on the bottom line. Um, but that also kind of puts extra focus on what has been a really big focus for Brian and Alicia and Emily and everyone over there, building out the subscriptions and services business as a counterweight to trading, because it's I think the goal is to always keep it above 50% of the total net revenue, and to just be able to smooth out these peaks and valleys that can come from trading flows. We saw the height in January and Q1. We saw the nadir here. So what but I also know that performance in the subscriptions and services disappointed. So,
Mhm.
what can you tell us about that?
Yeah, so first of all, I think the company already guided the second quarter subscription revenue to be down a little bit from the first quarter. So again, I'm not sure this is an actual surprise to the street. It is actually within or maybe even higher than the midpoint of their guidance. But again, I think there may be some disappointment was because you have Circle, you have the IPO for Circle, and people have maybe pretty high expectation about the market cap, how much revenue Coinbase and Circle can capture. And that's why there may be some high expectation baked in. But I would say, given what the management guided in the second quarter compared to what they actually printed, it was actually largely in line within expectation. If you look at the third quarter number, if you look at the midpoint, we are actually seeing a modest acceleration, around 7% acceleration or increase in subscription and service revenue from the second quarter to the third quarter. So you see that the goal hasn't changed, the momentum has not changed, which is the higher market cap, maybe high adoption, large adoption of stablecoin. So that's why larger market cap and higher revenue for Coinbase going forward. So I think that narrative still stays.
Okay. So let's talk about the biggest part of the subscriptions and services, the stablecoin revenue. I think the collective community was pretty shocked when Circle released its S1 and realized that perhaps Coinbase was making 10 times as much money from USDC as Circle itself. Uh, how Genius Act was just signed into law, so we're not able yet to see how that's going to impact the performance or the growth of USDC and by extension the impact on Coinbase's revenue. But since that is the biggest part of this subset, what are your expectations? What did Brian or Alicia or whoever, what did they say about it on the
Mhm.
earnings call?
Yeah, I think the bottom line is they expect that line item or revenue line item contribution to continue to go up going forward because Coinbase is also taking active steps to drive USDC adoption, right? Think about the partnership with Shopify. Think about the partnership with Nodal Clear. Their goal is to drive more usage of USDC. And it could be in the e-commerce space in terms of Shopify or the capital market space, meaning can we use USDC to replace cash as collateral going forward? I think Coinbase said we can. And that's why you can drive the adoption of USDC, right? And can we use USDC as a payment alternative to credit card or debit card? I think they feel they can. And I believe so too. It may take time. We may need to build more infrastructure, right? So we don't have it right now. I cannot just go to Starbucks or Costco and pay in USDC. But you never know. In 3, 4, 5 years, it could happen. So I think the goal has been driving the usage of USDC, and then in return, because Coinbase and Circle has a revenue sharing agreement, which is around 50-50%. And that's how Coinbase can make money longer term. So the outlook is still pretty strong for Coinbase for this line item.
When I look at it, it's really interesting because I see Coinbase and Circle having a unique opportunity right now to grow and expand the integration of USDC alongside e-commerce and other traditional areas of finance before JP Morgan and Citi and Bank of America and all of them come in. They still have sort of an open playing field. That's going to change. And then it's really going to, I guess, come down to perhaps two factors. One, uh, how successful they are doing all this and how much demand there really is for stable coins like USDC in real commerce and not just for trading. And then two, uh, will because USDC is I guess seen as somewhat neutral compared to like a JPM coin or Citibank coin and whatever. I could imagine some users not wanting to keep track of 10 different stable coins and they might just like USDC because it's neutral. It's fair for everybody. Is that something that they discussed or do you have any thoughts on that yourself?
Yeah, I think they discussed a little bit last night. My thought is it is similar to so-called I call it private credit, private label stablecoin versus general purpose stablecoin. The concept is similar to private label credit card versus general purpose credit card. What I mean by private label credit card is it is like if you go to Macy's, you have a private label Macy's credit card. You can only use that within the Macy's ecosystem, but you cannot use that Macy's card outside of Macy's. But at the same time, you don't see that Macy's will not accept your general purpose Visa and MasterCard credit card, right? So what I think what would happen is, yeah, it's JP Morgan, Citigroup, they will develop their own stablecoin. But that's good because once they develop the infrastructure, which is I keep emphasizing, we don't have it. But once they spend money, develop that infrastructure, it becomes another payment rail. So once they have that rail, why don't they also accept the point you just make, Circle or USDC or USDT, because they provide neutrality, just like general purpose credit card. So to me, going forward, we will see private label stablecoin, which is JPM coin or Citicoin, and then they will also accept general purpose stablecoins such as USDC or USDT, some other like these kind of stablecoins. So that's how I foresee what would happen in the future.
Okay. So let's talk about a few new, I guess, product rollouts or announcements that they've had in recent days. Uh, for one, there was a big unveiling of the new Base app designed to kind of be like the everything app. They're tokenizing stocks now. They've just launched domestic perps, I guess, to complement their international offering. Um, I believe they're also doing regulated derivatives futures as
Yeah,
well.
they do have.
So so maybe just as opposed to asking a question about each one of those, maybe just talk to me about put those together. Like, what was the narrative behind them, and how soon might we see meaningful revenue deriving from any of them?
Yeah, I think the company is very excited about the super app, the Base app. They have an event, I think 2 weeks ago. They announced that Base app. I'm excited too because I don't see a super app just like WeChat in China, right? We don't see a WeChat in the US. I think the ambition is to create that super app, that WeChat in the United States. So I'm excited about this. They are also excited about this. I think they mentioned that they have the wait list, and that wait list has 700, 800,000 people already register in the wait list. So you can
Hopefully, it's
tell.
not just people trying to farm a base token because I'm not sure one's coming anytime soon.
Exactly. So it's coming out, I don't know, pretty soon. We will monitor the situation. But I think this is a very interesting development. In terms of like the monetization, right? Going back to the analyst or investor angle, it will support their trading revenue, support their custody revenue, and support maybe even USDC because this app would allow people to use USDC as a form of payment. So again, it's an ambitious goal, but if they can succeed, it will be big for Coinbase. And then the other point you talk about, it's the derivative business. It was gigantic in the second quarter. If you look at the international derivative volume, it actually exceeded $1 trillion notional value in the second quarter, even though they don't charge a lot of fees on that. So from a revenue contribution standpoint, it wasn't that much, but it's getting larger and larger. They're competing against the largest exchange internationally. So I do feel like they have some pretty good initiatives going on that can support the earnings in the out quarters and out years.
And how much bigger will that derivatives business be once they close their $2.9 billion acquisition of Deribit?
It will be very big. So now they have the perps internationally. They are going to launch the perps in the US, and they don't have much option presence, if you recall. So Deribit, one of the key reasons why they do it is number one, they don't have a strong options trading. And the second thing is they can bring the technology to the US and expand in the US massively, probably next year. So I don't have the number right now because again, the financials are not disclosed yet. We'll get the number in the third quarter. So I can't tell you, I cannot quantify at this point, but I'll definitely update you guys, in the next quarter when we get the numbers.
What did they say about activity on base? I know that that continues to grow. Is that meaningfully contributing to revenue yet?
We have been tracking the base activity. It has been doing okay in the second quarter versus first quarter. From a revenue contribution standpoint, no, it's still not material. Maybe like less than maybe 1% or so to Coinbase revenue. So now this is still a kind of an optionality for us, but it could be getting much bigger maybe in 3-5 years or so.
So we've talked about a bunch of actually one more positive, and then I want to ask you about one potential headwind. The other two big announcements that I want to make sure we cover, the partnership with JP Morgan and then the partnership with PNC Bank. Obviously, those are massive new distribution channels. JP Morgan in particular to onboard new customers and make it easy to deposit funds, send funds, and withdraw funds. I used to work at Kraken, so I know how much of a pain point that can be for users and for the operators. What did they say about those partnerships?
Yeah, so the JP Morgan one could be the blueprint, right, for the partnership going forward with other banks. So now they become a back-end white label technology provider to these big banks. So they're not like, oh, trying to push the Coinbase brand to JP Morgan. JP Morgan still control the user experience, still control the consumer data and also the customer and all the good stuff. But in the back end, Coinbase become the technology provider. So that's the key thing. I think that's one thesis we have with Coinbase, which is it is not just a trading platform. It can be an infrastructure provider for many TradFi companies. If they can do JP Morgan and PNC, I'm confident that they can do the similar deal with some other banks, right? So going back to what they do, they they mentioned that I think there are around 80 million customers they can access to right now within JP Morgan network. And now if you have the JP Morgan credit card, you can use that credit card to buy crypto, use that to fund the crypto purchases, which is not allowed in the past, by the way. The
Yeah,
second one
banks
is
don't like it when people borrow to buy crypto. So it's
exactly,
actually a really big
exactly.
step for JP Morgan and JP Diamond in particular.
Now become closing, I think close to become a reality that you can use your credit card, JP Morgan credit card to buy crypto.
I think a long time ago they either let a lot of banks let people use credit cards, or maybe they just didn't realize that their clients were using their credit cards to buy
Right,
crypto.
right.
And I know they put a stop to that because
Exactly.
it's
Ex-
not like you can't use a Visa card to go gamble in a casino, I guess.
exactly. And the second point I do want to point out is they allow people to redeem the reward, like the credit card reward, and then transfer to USDC or through transfer to Base and get to USDC. So what that means is now they make the reward points to be fungible to crypto. That could be another key things that I do feel like crypto has the potential to become part of the loyalty program per se. So that makes this transaction much more seamless between your maybe in the future maybe your airline rewards, right? Your AMC rewards, now JP Morgan credit card rewards to buy to exchange to USDC. And then finally, the third point is they allow people to seamlessly link the Chase accounts to Coinbase account, and then you can buy crypto easily. So those are the key things that you see they have very tight relationship. They're building a very tight relationship going forward.
Just two more quick ones because I know we're getting close to time. I don't know if it's a coincidence or not, but JP Morgan announced a few weeks ago that they were going to try to start charging fintechs for access to customer data through APIs. And PNC CEO basically cheered on Jamie Dimon in making this announcement. Coinbase happened to partner with both. It could be a coincidence, but maybe not. What are your thoughts?
I don't know. It's hard to speculate. They may have a deal. I don't know for sure. It could be a coincidence, just like what you said. But I don't have a strong view one way or the other. If the banks decided to charge fees for feeding data to fintech company, they can do it. But the bottom line is we just need to understand the dynamic and the partnership and whether it will actually hurt the bottom line of this fintech company. But so far, I haven't heard anything that the fee would be massive, or whether they are actually or Coinbase is actually paying any fee for that. But we'll see. We'll get more information down the road if that's
Yeah.
actually happened.
Yeah, I mean that's actually a much bigger story. It's something that I'm working on right now, and it's a much bigger story than just crypto. I mean, it's
Yeah,
fintech
or fintech,
in
exactly. All
general,
fintech companies,
which
exactly.
so it's much bigger than just Coinbase, but could potentially affect like a lot of.
And there's an open banking rule as well. Think about that. It should allow, consumer to move the data freely. So there are lots of like things involved in that
Well,
conversation.
yeah. The idea is, I think that the open banking rule, the CFPB wanted to vacate it, and then they decided not to, and now
Yeah,
there's going to be like a new rulemaking process, and you know, exciting stuff. We were worried that
exactly.
that all the DC drama was going to go away with the Clarity Act and Genius being signed. Well, we have something new. Um, anyway, just we're kind of at time. I'd like to just get a sense from you, like what your expectations are for the next 6 months. Big a lot of anticipation for a market structure bill, be it Clarity or something else. I know, especially like the fourth quarter tends to be pretty bullish for crypto. Uh, what are your sort of takeaway thoughts?
Yeah, so for the industry and for the company, so for the industry, I think there will be more regulatory clarity, right? Clarity Act could get signed into the law, hopefully by September. And then there will be, to me, I think that may support something I call altcoin summer, right? Because we have clarity on Ethereum and Bitcoin already, but how about Cardano, Solana, and Doge and all these other tokens? We don't know, but we may get more clarity. The second one is there may be like more crypto companies, they want to go public. So you may see some more IPOs and crypto companies trying to raise fund and things like that. The third one may be consolidation, right? When you see the kind of the regulatory clarity, TradFi companies may come in. When they come in, they may also want to buy crypto companies, right, to support their crypto purchases or infrastructure. And also smaller players may also want to consolidate and merge to become bigger to get the scale. So those are the three like key themes I'm looking for the industry. For the stock, Coinbase, I do want to address that. I know the stock is down quite a bit today, but to me, it's expected. But the backdrop, it's pretty good. Again, improving trading volume, improving SNS revenue in the third quarter, and also regulatory clarity. Remember, they have not even baked in the Durabit number into Coinbase financials. And Coinbase has a very strong balance sheet to grow organically and inorganically. So the backdrop for earnings growth is actually not bad for Coinbase. So to me, it could be a good buying opportunity.
Okay. All right. Well, great. Owen, thanks for joining us. We look forward to having you back.
Thanks a lot. Bye.